Okay, I'm going to shake things up a little bit, because I'm a professor, I'm a finance professor, and I was looking at sort of the history since I've been in DC. So I came to DC about 20 years ago, and I was in the Wild Wild West at that time. It was considered the Wild Wild West. Okay, so I've heard this Wild Wild West theme before. And what were we doing back then? We were allocating to hedge funds. And at that particular time, everyone was scratching their heads about hedge funds. Oh, these guys are so bad. They're going to steal all your money. They're a bunch of frauds. And we're like, no, 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 no. And we had to educate the institutional investors, and we had to go talk about what do hedge funds do. And it's really interesting because what we're seeing that's happening right now is very similar. We're replaying that scenario. Who are these guys in the cryptos? Oh, they're all a bunch of frauds. They're not real. And what I'm going to try to sort of talk about today, and this is just a conversation I want to have with you guys, and I want to stir the pot as an academic, and I want to challenge you guys to think about these things deeply, because I want to show everyone here, first I want to know who's working on Capitol Hill. I need to make more friends. Okay, I need to be your friend there. Who else is here? Who's working with Gary Gensler at the SEC? I definitely need friends with him. And you want to hear something really funny? So I'm teaching this cryptos and blockchains class at Johns Hopkins Business School. And I told all my students, there's 100 of them, I said, watch the MIT free blockchain course for Gary Gensler. I said, watch what he says while he's in class. And he's really bullish about blockchains, and he's really bullish about cryptos, and he talks about fintech and the future. And then you fast forward, you're dropping him into the SEC, you're surrounded by the Treasury folks, and he's starting to drink this Kool-Aid, and now what he's saying, oh, it's all, we got to put the rails in, we got to put the rails in. So I want to meet some of the people who are around Gary Gensler, because I want to say, hey, professor, come over here. Come to GBA, let's talk about this. Why did you say these things at MIT? How did you change your mind? Where's the data? Why all of a sudden this industry is so bad? Kind of like the hedge fund industry 20 years ago. But just as an anecdotal sort of fun thing, at that time, there was a guy who was really against hedge funds. And the regulations went against the hedge funds. So any hedge fund manager with over $100 million of assets under management had to get a chief compliance officer. And actually, that helped me and my family because my wife was a lawyer. And we moved to New York City. And because of so much pressure on the hedge fund industry, she got a job as a chief compliance officer. So I'd like to thank the regulators for helping me personally out in that endeavor. Okay, so what I'm going to do here is kind of take a view more from the financial perspective. And the first thing that I want to sort of talk about is something very fundamental to finance, right? And that is about risk and return. We teach this to all MBA students, and for those who went to business school, you know the difference between risk and return. Here is a graph. There are two lines here. The orange line is the NASDAQ index, which is a market cap weighted 3,000 stocks, heavily sort of focused towards technology stocks. Okay, that's the orange line. The blue line is the Dow Jones Industrial Average. This is the 30 blue chip stocks. This is price weighted. Now, the first observation is orange is doing really, really well versus blue, right? But you don't get that kind of performance without volatility. And what does that mean? There's upside volatility and there's downside volatility. And oh boy, is it a bumpy ride. Now this is what you have to ask yourself, and this is the theme of this presentation. Which one do you want to be on? Do you want to be blue or do you want to be on orange? But before you answer that question, okay, I have to tell you something. It depends on your horizon. Do you want to lay this down for yourself for the end of the year investment because you need to buy a house? Or do you want to lay down this investment for your kids and their grandkids, right? If your horizon is long, and I would argue the United States of America, when it comes to technology's horizon should be very long, right? Which one would you choose, blue or red? For your kids, you're going to make an investment into their kids' retirement fund. Would you want to hold the Dow Jones 30 blue chip stocks, or would you want to hold technology stocks? Technology, right? Without a doubt, technology. Why technology? Because it's explosive. It's interesting. It's fascinating. We see the top companies in the S&P 500. They're all technology companies. They're embracing AI, machine learning, big data, and soon to be blockchains. And this is something that we should all think about. We should all struggle with. What is our horizon? Where is the opportunities, right? What is the risk and the return? You're not going to have massive returns without taking some risk. If you want no risk, I'll tell you where you should put your money. In your bank account, in your savings account, right? There's no risk there. There's no volatility. You'll get that money back, hopefully. Hopefully inflation won't erode it all, right? But that's what I'm talking about, right? So remember this risk and return trade-off, because it's very important. I think regulators need to remember this. We as a society need to remember this, right? Academics need to remember this. Entrepreneurs who are taking big risks in this environment need to remember what's going on here. And the market is efficient. And what does that mean? Things are priced correctly, okay? There are episodes of inefficiency where things are not priced correctly, but by and large, things are priced correctly. And what does that mean? That means if you're a fintech entrepreneur doing blockchains or crypto something, and your assets started 2 years ago, $1 billion of assets, you fast forward 1 year, 2 year, that entrepreneur now has $25 billion of assets under management. From $1 billion, that's a lot of money, right? From $1 billion to $25 billion. He just spoke at my class last week, right? And so this is the kind of explosive growth that we're witnessing in this crypto space. And we have to embrace it. We have to take the lead here, all right? So remember, orange versus blue. Are you ready? Orange versus blue. Here is our friend, the Bitcoin. You remember orange? Do you remember blue? There is our friend, Bitcoin, as a proxy for the cryptocurrency market. What do you see first off? How much volatility is in this thing? A ton of volatility, right? Is it worth the risk return? It dwarfs the volatility of equity indices. It's not even close, okay? Remember, think of your horizon. For your kids, grandkids, for the future, what would you invest your assets in? T-bills, Dow Jones 30, S&P, NASDAQ, or maybe some crypto exposure, right? So this is basically where we're at right now. All right. The theme of this talk is, but with more risk, will we get more return? And now I'm not just talking about financial returns for your investment. I'm talking about societal returns, new jobs, right? New inspirational industries that are happening. How can we use blockchains and all this wonderful stuff to solve social problems? How can we reinvent cities, right? I think Miami's doing a great job of doing that. I'm hoping, and this is a little bit out there, but this is the Government Blockchain Association, I hope we get a president that's very, kind to the technology sort of industry, because that's how I see this. I see this as just technology. Okay, so let's start this off because it's supposed to be an educational event here. Let's start out with the definition of money. We go to Wikipedia. Money is any item or verifiable record that is generally accepted as payment for goods and services, right? Money is a medium of exchange, okay? Store of value, and a unit of account, all right? These are the three, everybody should know this now. Now we're gonna go through a few cryptocurrencies. Number one, is Bitcoin money? Well, how can it be yes and no? Is it money or is it not money? Why? It's a commodity. It's real estate. What is this thing? What is it? Is it a currency or commodity? See how much confusion there are? We need the regulators in here because I want to see these people really debate this out. What am I supposed to do? What am I supposed to teach when I put Bitcoin? Should I put a money slide or should I put a real estate slide? Or should I put a commodity slide? What should I put up?
Digital asset.
Digital asset. Cryptocurrency. Okay. Digital property rights, store of value, right?
The SEC says it's a security.
Okay. Okay. We are going to revisit the SEC's security definition because I'll tell you a small little story, okay? I'm going to issue some kind of token. I'm just going to call it, I don't know, the GBA token. And when I issue the GBA token, it's actually a security because I'm trying to raise funds. I want to raise $30 million because I need to build some infrastructure, a platform. So I issue this GBA token, or sorry, Gerard, I don't mean to, you might be issuing something like that, and I apologize. I issue some kind of token, and I'm raising funds for it. Clearly, that's a security. I create a platform, I start hiring a bunch of engineers, and we create something that's really, really cool. I'm using that same token now as a utility to power the contracts on that platform. Now, all of a sudden, that security has morphed into a utility token. Okay, SEC, does your definition of the security change over time? When did it change from a security to a utility? After I went live, or was it during prototype? When does it change? So our regulatory system does not capture that dynamic ability for something to morph, right? So this challenges regulators, it challenges professors, it challenges people on Wall Street. So what I want to do is go back to the origins of Bitcoin, and you guys have seen this before. And in the title, it says peer-to-peer electronic cash system. So Satoshi, initial intention was what? He wanted an electronic cash system. He wanted something so we could facilitate transactions, right? That was her inspiration. That was the intent, okay? But where has this come? What has happened to Bitcoin? What are people doing with Bitcoin? They're hodling it, right? Oh, for those non-cryptos, we will use some of the terms so it sounds cool. They're hodling it, means they're buying, they're holding it, okay? I'm thinking this is a great investment for my daughter when they retire. So you've got a long horizon, right? People are just holding this. It's more like digital gold, right? Although the intent initially was to make it kind of like a peer-to-peer cash system, right? So isn't this really interesting? The author of this, it didn't really turn out exactly how she wanted it. But the story's not done. We don't know. It may morph back into the origins, right? So let's take a look at something else. Let's try Doge. Is this money? Now, before you answer, I want you to think carefully. What generation are you in? Very, very important. Is it a medium of exchange? Is it a store of value? Is it a unit of account? Now, it depends, and this is very, very important. It depends on what? It depends on the user base, okay? My generation, the Wild Wild West was hedge funds. I don't think we're going to be, I don't see me and Dante over here sending Doge to each other, right? But we're done. I mean, we're like, cooked, right? My students who are MBA, right, will they use Doge? I asked them about Doge, they're like, oh, no, we don't do that. So who's using Doge? The millenniums, right? This next generation below us, and my students in business school. Are we out of touch with them? Hey, regulators, are we out of touch with, Doge could become hugely popular if people buy into this, if they believe in this, right? We have to sort of think about the different generations. Here's the different generations, the wealth divide. The baby boomers are in blue. Generation X, which is me, in red, okay? And then we have the millennials. And the millennials, look at the proportion of wealth that they have. They don't have a lot, and they want some. They want to create economic value. They want a chance of this sort of wonderful industry that's happening right before us. They're going to take a lot of risk into this thing. They're going to enjoy sort of using Doge. Now, if they all use Doge, right, as a way to sort of transact, will it become a currency? For them, maybe, right? So the point here is that what we have to do is we have to think across different generations, not just our generation, not just what we did. Look across the different generations. Talk to the younger folks there who are really excited about these cryptocurrencies, all right? It's important to keep that in mind. And Doge coin could become a currency if enough people use it, okay? Okay, what about stable coins? Ooh, stable coins. There are bad people there. Why is there, what I don't understand about stable coins, first of all the crypto guys, I want to ask the guys who created these stable coins. You don't like the US dollar because we print too much and inflation, right? The purchasing power of dollar goes down. So why do you create a cryptocurrency linked to the dollar if the purchasing power is going to go down? I don't get it. Why not link it to something else, like real estate or some real asset or something, right? But anyhow, this stable coins is under fire, right? Under fire by our friend who used to be a professor. Prior to that, he was a partner at Goldman Sachs. He grew up in Baltimore. He's definitely street smart, and he understands how everything works, right? You can't play any angles on him. Here's Gary. Gary Gensler says stable coins are poker chips at the wild, wild west crypto casino. Okay? 20 years ago, people were telling me that I was wasting my time in hedge funds because I was in the wild, wild west of the investment industry. Okay? It wasn't going to survive, and there's only like really bad people there. I went out there, I met a lot of these folks, very sincere. Majority of hedge fund managers are trying to make money. They don't want to, do anything wrong. I think the majority of crypto folks are the same way. That's my hypothesis. I'm going to go out and start meeting more of these crypto folks, but that's my hypothesis. They really want to do something exciting, right? So next time Gary Gensler talks about the wild, wild west of the crypto game, what I want you to say is, www, don't you mean the World Wide Web? That's where I wanted somebody who worked in Gensler's office. I was going to try to send that message back, but maybe, maybe you guys can help us. All right, so before we go off and crush cryptos with overly burdensome and boring regulations, let's see how large this market is compared to others. I just this morning gave an assignment to my students, MBA students, right, in class. They were super excited about this assignment. I said, analyze this thing, Bored Ape Yacht Club. What is this? Is this a viable business? There's 10,000 of these, and in order to be part of this club, you have to hold one of these NFTs. What is going on here? Is this a fad? Is this a real business? So I told them, your assignment this week is actually contact one of these people and interview them. There's 10,000 of them, right? It's just a business school student. How bad can they're just going to ask them sort of questions, right? Is this a new business model? I don't know. It's clearly very interesting, right? Okay, so let's see how big this market is. My only tip for today for those newbies in cryptos is there's one website that you have to know how to get to. It's called CoinMarketCap, and I don't work for CoinMarketCap. I don't have any shares in CoinMarketCap, trust me, okay? But it's a great way in order to enter this industry. Once you enter this industry, on that dashboard, you can find everything. It's a very transparent industry. You can find the websites, you can find the white papers, you can find where it trades, right? So this is a very nice, if I said, hey, let's look at the financial markets, chances are you'd be like, I need a Bloomberg terminal, right? In order to have that deep insights into these companies, right? So the only thing that I want to tell you guys is at CoinMarketCap at the very top, all right, it tells you how big this industry is. It's $2 trillion, and it fluctuates because it's very volatile. And this is when I took a snapshot of this probably last week when I was putting my notes together. So about $2 trillion. Does anybody know how big are the total assets in the world? If the crypto industry is $2 trillion, and all the assets in the world are $2 trillion, that's pretty big. That's a pretty big industry, right? But how big are all the assets in the world? Very good, very good, right? So this industry is still relatively small versus all the assets, okay? According to a study by Boston Consulting Group, you have $431 trillion. So compare $431 trillion versus $2 trillion. So you're going to take a $2 trillion market in technology, and you're going to put a lot of regulation on this market. It hasn't even started growing. It's almost as crazy as to say something like this. You know, the quantum industry, quantum technology, are you familiar with that? It's coming over the horizon. Quantum, let's regulate it now. Why? Because there's bad actors there. Okay, prove it. Show me the bad actors. Show me some numbers. I'm so tired of hearing folks that I totally respect. They say cryptos are bad. There's bad actors there. Okay, well, what about cash? I've seen a lot of these drug busts, and there's mounds of cash. Can we do a comparison? You guys have the data. You're the Treasury Department. Make a statement, support it with data. Professor Liew will call you out, right? Okay, so anyhow, I would argue that the crypto industry is still relatively small versus the traditional wealth across the world, all right? Less than 50 basis points. When it comes to financial wealth, I think it's less than 1%, right? So it's still very small, and it needs some chance to grow. All right, fine. When we look at institutional investors, when I worked in the hedge fund industry, that's all the people that we talked to. We went after institutional investors, pension funds, foundations, endowment. We sat down with the pension funds and we said, you should invest in hedge funds. And they're like, oh, that's really dangerous. And we don't have enough staff to understand the risk. It's really complicated. And so we said, well, you can hold a portfolio of these hedge funds, and we have certain risk mitigation techniques and insights into that. And that's basically how we sold the fund of funds. Higher expected returns, diversified for your existing assets, and so forth. So institutional investors are starting to look into cryptos, which is very interesting. The US is relatively a little bit behind, meaning that Asia has about 71%, Europe has 55% exposure, US has a third. A third of this exposure, I think, is because of sort of, the people who think that this industry is potentially very dangerous. But I also think me in particular, I'm not doing a very good job educating. I'm working at Johns Hopkins Business School, and I should be down there. Which way is Congress? This way? Which way is Congress? That way. I should be there educating the staffers because they have time. I should be there educating the regulators and at least engaging them in a conversation. So to the extent that this is a little bit the people in the ivory tower's fault. So I'll take some of that, right? But I am open to talk to anybody in Congress or any of the regulators because I think it's such a great opportunity. Not for me in my lifetime, but for my kids and their kids, right? So I'm doing this more so that I can set up some success and provide technology that will really change the world, make US the leader in blockchains and cryptos, and get everyone fired up again. But we got to be willing to take that risk. And the other thing is, we got to be willing to sort of work together. We can't just, I'm not going to talk to the regulators. I'm not going to talk to the academics. I'm not going to talk to the entrepreneurs. We need to get together, and I'm trying to build this bridge. Sandy Barsky over there, raise your hand, Sandy. Yay! He runs a blockchain Friday working group for ACT-IACT. He's an amazing connector, and I've learned so much from him, in particular, learn how to connect the ivory tower to the industry and also to government. And I think that we all can sort of, take a note from him. All right, so this is my humble attempt at building a blockchain stack. Are you ready? Yeah. This is going to be exciting. Well, this is a real technology stack, but mine is not. Bitcoin's 2009. This is where it all started. On top of that, we have Ethereum. And then we have Cardano. And then we have Polkadot, Binance, and a few other things. Now, do you guys remember when there was a war between XL and Quattro Pro and Lotus 123? Do you remember that? The battle of these spreadsheet titans, right? We're going to see that same war. It's going to be really exciting. Charles, are you going to go head on with Vitalik? he's not going to do that. Here are the competing smart contract platforms. They are going to go and battle it out. We are going to benefit because transaction costs are going to go down. The speed is going to go up. Just like the spreadsheet, remember? While we watch Quattro Pro and XL and Lotus 123, I love Quattro Pro, but Microsoft just crushed them. All right? But we benefit. The functionality is going to be there, the speed is going to be there, and so basically what we're going to see is these wonderful smart contract platforms go at it. I personally, because I'm an academic, I'm a big fan of Cardano. I was there in Miami 2018. Why? Because everything's peer-reviewed. I'm an academic, right? I got to meet so many cool people there. Charles was nice enough to take a picture with me. I met, Stephen Wolfram, just an amazing community. If you ever get a chance to go to a conference, compare them. Go to a Cardano conference, right? I got my shirt, a little swag here. I'm so happy. I'm going to show my kids. They're going to be so excited. But more importantly, when I tell my daughters Ada and how that was named, they're inspired. They are so inspired. My kids, they're like, really? Somebody did that? Ada Lovelace? That's awesome. So, think about the inspiration that you can be in this community. I think Cardano is going to give everybody a run for the money, and I'm rooting for you guys. Now, I'm going to tell a little bit. Binance needs a little PR upgrade. Binance, okay, needs to hire Gary Gensler to be the CEO. Okay, why? Because that's what they're lacking. They're lacking a real credible Goldman Sachs top executive regulator. Once Gary Gensler goes to Binance, they should go after Goldman Sachs. Well, if Gary wants to do that. I don't know what he wants to do, but that's my suggestion. He doesn't have to take it, obviously. Okay. On top of that, we have this, the ICO craze. And I always remember this guy, because in 2008, 2009, right, I got flushed out of the financial crisis. And I was trying to talk to my wife. I was saying, hey, you know, I should go do something. And every time I tried to sort of approach her that I should go do something in crypto, this guy sort of resonated in my mind. I was like, how am I going to tell my wife that I'm going to go do crypto when there's people like this out there? And the ICO craze of 2017 was kind of difficult. What it did show us is that the internet connects us all. And this is really, really interesting. And there's a lot of people out there that want to use the internet to be entrepreneurial. Some of them are a little bit too aggressive, okay? But the ICO craze was a really, really eye-opening event because that's the opportunity of talent across the world. And the internet is pulling this ability look, talent is uniformly distributed across the world. Access to capital is not. Blockchains is allowing talent on the edges of the network in order to access to some of this capital or digital value. It's very powerful and it's very interesting. Now we're here at tokens, we're here ERC20 tokens, now we're here at non-fungible tokens. Now we're going to get back to the story in business school. Finally, I can explain how NFT has contributed to a room full of MBA students. And it works as follows. If I created some kind of thing, digital value, a picture, whatever it is, and I sold it to my friend Dante for 100, whatever we want to sell, 100. Dante sells it to Sandy for 200. I don't get a part of that trade from 100 to 200, right? Dante captures all that profit. But I can actually put into a smart contract, I want royalties on resell. So when I send that to Dante for 100 and he sends it to Sandy for 200, I get maybe 10% of that. But I'm a hedge fund guy, I'll ask for 20%, right? So when Sandy sends it off to somebody else, then I'll get another royalty on resells. Now this is really interesting, and my wife was like, yeah, but they can already do that. Yes, they can do it, but now they have to find Dante, they have to find Sandy, they have to show them the contract, they have to say, hey, look, Dante, that Professor Liew, you see that contract? You got to give it, 10, 20% back. Here with the smart contract and the blockchain, that is going to be a very fluid transaction. Now people can create artworks, digital value, they can add royalties of resell. We are going to, literally that part of it at the very top on royalties and resale, I think that's an amazing contribution that didn't exist before in the financial markets. That is going to expand the span of sort of these wonderful instruments that are going to come out. And this is only the beginning. Now I'm going to shock wait a second, I'll give you 2 seconds of rest, because what I'm going to tell you next is just going to drive you crazy. Are you ready? Have you heard of the metaverse? If you're an aide and your congressional person doesn't understand the metaverse, just tell them to watch Ready Player One and they'll get it, okay? So it's not hard. Inside there, we can do things and generate digital value. Now we have the mechanism to take that digital value outside into the real world and buy a hamburger or a pizza, okay? But here is the real question that I have. What happens if we enjoy the value in the digital world more than in the real world? So we're okay with living in that that Elon Musk small little house, that mini house thing, right? Because we have so much interest and excitement in the digital world. What's going to happen then, right? What happens if people try to regulate the metaverse and people create another metaverse inside? And they create another one and another one and another one, because they're going to get away from the regulators because they don't want to get regulated. And they're going to take their friends all the way through this. And the only way that you can get inside is either you buy this NFT or you know the password or whatever it is. How are you going to regulate that, right? So, I think this is really fascinating. I don't know the answers to these questions. I do want us to think about it. I do want the next generation to educate the older generation, which is us and our Congress people and folks, right, and our regulators. I think it would be great if the SEC had an internship program, meaning that all the people in the SEC, they had to go work for, like, as an intern for one of these crypto companies, so they can understand how difficult it is for a startup, how much the entrepreneurs struggle with regulation, and they can bring that back into the SEC, and they can have a much better and a fruitful conversation, right? So I love this royalty on resales. This is something that never existed before, okay, in such a fluid manner. This is something I can explain to MBA students, and they get it. They understand the potential here, and they get very excited. I don't know enough about the metaverse. I was in Cardano's metaverse. I liked that. That was a lot of fun. My daughters, we were running around trying to pick up things. It was very hard, but people were very nice there, which was great. And so Flying Turtle, I love that, Charles. That was really cool. Whoever did that, give them an A+. Okay, the final question again. If blockchains is just technology, and the potential of this technology, unlike 20 years ago in hedge funds, this potential is way more than the hedge funds, the wild, wild west, right? If I had to estimate how big this potential is, I can't. I cannot estimate it. All the thing I can tell you, it's kind of like the early days of the internet, right? Here's email starting to work. Here's blockchains, and now we're moving digital value. Where is this going to go? I don't know. Will it dethrone some of the incumbent companies? Absolutely. Will it dethrone all of them? Probably not all of them, but it will dethrone a lot of the incumbents who are not paying attention to this technology, okay? So with that, I'll wrap it up. My last question is, but with more risk, will we as a society, as a human race, get more return? And I think absolutely yes. Thank you very much. Do you guys have any questions? Rahula, are you going to ask a question? Don't ask a hard question. She's way too smart.
I heard you're a fan and a believer in Cardano. Do you expect it to overtake the #1 or #2 spot in the near future?
Okay, I'll tell you exactly how Cardano can overtake the #1 spot. Are you ready?
Yeah.
Are you ready, everyone? There are a lot of these really big agencies in the government, and they have a lot of problems. One of the problems is healthcare records, interoperability. So if you're a person who serves in the Army and you're under DOD, the DOD sort of captures your healthcare records. But then when you retire from the Army, you become a civilian. Your healthcare records are there in the DOD. Now you become, maybe you want to sort of have your healthcare from the Veterans Administration. Now you move over to Washington, okay? And your healthcare records are following you. Now you got to go from Washington, maybe you get another job in Massachusetts. Now your healthcare records are still in Washington and also in the DOD. They're not following you over to Massachusetts, and they're trying to solve this problem, healthcare records, right? Who does a healthcare record belong to? The patient, right? So why not, for every veteran in America, let them print their own NFTs, and associated with the veterans comes their healthcare record. Wherever they go, they take their NFT, whether it's like, you know, a QR code. Here's my healthcare records. They go from Washington to Massachusetts. Here's my healthcare records, right? And why doesn't Cardano work with the VA and the DOD and work with the agencies here in America? How powerful will that become? Now, here's the one that will blow your mind. Let's get all those people who are creating these wonderful platforms. Let's carve out a little area, maybe in Baltimore, and say, come over here, build, no taxes for 10 years. How many jobs would come into America? How many jobs? How much cool, innovative things would happen? And the final thing is, let's work together. Let's bring the agencies together with these top entrepreneurs. And let's solve these problems together. Public-private partnership, but you got to make it work. You got to be careful because some people don't like the public-private partnership and it doesn't really work. You need to make sure that everyone's doing some interesting things. Yes, sir?
Why Cardano? You can do that on any blockchain. Why particularly Cardano?
You know, I have 2 daughters. Maybe if I had 2 sons, it'd be different, you know. They like ADA, they like to talk about it. It's so emotional. And also, Charles does the coolest conferences, and it's intellectually stimulating, and he brings in like the smartest people, the academics, and the money. It's not only the technology, you got to bring the money there, right? You got to bring the institutional investor there, you got to bring the venture capitalists, you got to bring other entrepreneurs there. You got to generate a lot of excitement, and I think they've done it very successfully.
So that's an awesome elevator pitch. The GBA is doing a healthcare delivery blockchain platform, and we looked around, and there's a HIPAA-compliant blockchain, and you really, really need that. Now, developing HIPAA compliance for something like Cardano will take you years, but if that's a project that you'd like to move forward, we have a working group for you.
All right, so wait. There's one question. There's one question from Sandy. Sandy has been instrumental in bringing blockchains to the federal government. He's one of the thought leaders. He's doing also some amazing things when it comes to AI and education. So Sandy, please.
So Professor Liew, thanks. You've been really generous. Can you speak about a little bit about the VA National Artificial Intelligence
Absolutely.
Tech Sprint? And some of the outcomes that came out of that that you are keenly aware of, please.
Absolutely. So the Veterans Administration had a national artificial intelligence competition, a tech sprint competition, and it was an amazing competition. Basically, you have to find some people in the VA and basically come up with something and then pitch it, right? SoCat, actually named after my two daughters, Sophie and Catherine. There were 66 people that applied, about 40 got accepted. We finished number 2, second place, and number 1 in patient experience. And we used AI in order to analyze healthcare records for the veterans, sample healthcare records, and allow veterans to interact and chat so they can understand a little bit more about the healthcare. That is an amazing competition, okay? So if blockchain companies and platforms can sort of start pairing up with these wonderful agencies and constructing these competitions and incentivizing people to sort of work on these problems and collaborate, I think it would be very, very interesting. And then, we could actually do some really, really exciting things together. Competition is great. You get to meet a lot of people. You build bridges. Part of the way that things work is you got to meet these people and say, hello, nice to meet you, right, first. And then, then you start sort of thinking about how can we collaborate? What is your problem? A lot of agencies in the government, they have problems. They're understaffed. They don't have enough budget. How can we use technology to solve their problems? How can we use blockchains? How can we use AI, right? How can you collaborate with them? I think it's fascinating. Some people, when I first started government contracting, people were like, we just want to get up to the industry standard. And I'm like, look, guys, you have all the data. You can do much better than that because you have all the data assets. So now all you have to do is sort of break down these data silos and work together. And the funny thing about technology, the more I learn about technology, it's really not technology holding us back. It's people. It's us. We're holding us back. We have the technology. We just need to learn how to work together. Okay? And then we have to learn how to disagree. It's okay. You want to go this way, I'm going to go this way. Let's talk about it, right? Let's have a conversation. That's very important. So I think what's really exciting about blockchains and Government Blockchain Association, just to plug this organization, is they're bringing very sincere people together. And that's important because that's how you build this wonderful community. Sandy and I and a few other people, we wrote a 4-page white paper. And through that, Sandy basically told me, he said, you should do this. And I'm like, I've never written a white paper in government ever before. And he's like, I'll help you. So he started telling me and started guiding me. And then all these people came out from his ecosystem to help. And like literally, we created this wonderful white paper that's going to do some amazing things. And ultimately, this project goes all the way up to the White House. And it's going to get a lot of backing, which is amazing. And all it has to do is education. I think if we push really hard on the education front in blockchains, then we could make America an amazing leader in this technology. The other thing is we got to get people like Charles. I don't know where are you called. He's from America. I think he's from Colorado, right? Why is he in Hong Kong? That doesn't make any sense. Bring him to Baltimore or whatever city that needs help, right? If he comes to Baltimore, oh my God, how many jobs are there? Johns Hopkins is in Baltimore. We have a lot of engineers, right? But imagine if you grab all these wonderful folks, right? Many of them arguably are sitting outside the United States. You incentivize them to come inside the United States. They bring all their technology, right? What's going to happen? It's going to be amazing. We'll have an amazing future together, right? What we should be careful about is being scared of this technology. It's just technology, right? Just like in the hedge fund industry, there are good and bad people. The majority of people were good, okay? Yeah, there's some bad apples. There's a Madoff every now and then, right? So far, what I've seen in the crypto and blockchain state is the same. The majority of people are good. Yes, there's going to be a few bad actors. There's always going to be a few bad actors, right? Even on Wall Street, where I'm from. Even at the Ivory Tower, right? But you can't overregulate something and just keep pointing to these few bad actors and then ruin it for everybody else, because you're basically you're squashing innovation, you're squashing jobs, and you're not giving things that inspire people. You want to give things that will really truly inspire people to do things, right? And I'm talking about my kids' generation, their kids' generation, right? That perpetuates this wonderful thing called the American dream that my parents got to live through their kids, right? So, you know, that's one of the best things ever. So, yes, go ahead.
Since you mentioned health records, I'm a small company and I subcontract on a project where we develop health records for Medicare and Medicaid. We have two states right now that are signing contract with 3 others.
Congratulations, you're doing some deals.
And the tech stack I inherited is .NET. I'm an architect on on this project. And I'm a huge fan of Cardano. I'm learning Cardano right now. So the future, I'm thinking smart contracts, using that for the platform. But there is a hesitancy for me to introduce that into the roadmap of the five-year plan.
Yeah.
So
How do you overcome that? Okay.
Can you summarize the question real quickly
Yeah.
before you?
So just to summarize the question, there's some, you know, you're working as a government contractor, you're banging your head against CMS. You know, we've been trying to penetrate CMS for a long time. It's really hard. And then you're sort of laying down the future plan, and you want to put some smart contracts in there, which I think is brilliant, by the way. But there's some hesitancy on the other side of the table because they don't really understand what's going to happen, right, with a smart contract. So therein by you need to do, you know, lots of sort of education, show them small proofs of pilot, okay? So, you know, just for full disclosure, Booz Allen Hamilton did a survey of all the blockchain projects across the federal government. At that time, they funded this survey through the Data Foundation. And our company, SOCAT, was one of the first ones to use the blockchain in the federal space in production. And we're sharing federal grants data, okay? And it was a little premature, meaning that people didn't understand blockchains, they couldn't understand the value of it, and you know, you need adoption, right? And you need to figure out the economics that make sense. Why would people use this? What problem it's trying to solve? It's not an easy question. The hardest question to answer is why blockchain? Why not just a database, right? That's the hardest one. So you have to think about that carefully, right? And you gotta make it understandable. Long gone are the days where people just try to, you know, smoke screen you with a bunch of technical jargon. That doesn't work at all, right? But, you know, I think you should keep at it. You should just sort of show some value. I personally think the open blockchain is the way to go. I mean, you know, permissionless. I think too many organizations and companies try to do a permission blockchains. I've yet to see that work. That doesn't mean it can't work. I've yet to see it work, right? And I've been teaching about blockchains for about 3 years, right? When I first introduced a blockchain course at Johns Hopkins Business School, I got yelled at. Like, yeah. Come on. Take a picture of me and this young man.
All right. This is awkward. All right, stay here for a second. So listen, for those of you that are here, I want you to all realize this is a seminar. This is really training, right? And so, first of all, is Jim awesome? So you got a lot more. So this is actually part of our GBA Foundations training that we do. Plus, we're doing some extra stuff. You're actually getting a lot of additional stuff with Jim because we're bringing experts in. Were the experts from earlier awesome also? Yes. But in this section right here, one of the things that's really important, Jim, is, we talked about how a basic blockchain works, and then we talked about the enterprise blockchains, and then some advanced blockchains, right? So once I got this blockchain thing going on, now I'm thinking about maybe I should do a token, right? And a blockchain, essentially, you can use for records and ledgers, but now if I'm going to put a token on it, right, what are some of the legal and regulatory implications that happen? And if you could talk a little bit about security, utility, Howie Test, just a little, because they walk out of here.
Yeah, there's
and
another part to this presentation.
Oh, okay. All right.
I
sounds good.
forgot. All right, guys, can you flip to the next slide? Oh, it's me. Okay. So I inherited this part of the presentation about smart contracts, and I'm just going to give you Smart Contract 101. So basically, Nick Szabo sort of coined the term smart contract. The way you can think about it is a vending machine. So you go to the vending machine and you have a quarter or whatever, you put the quarter inside the vending machine and it goes through. You've initiated a contract with that vending machine. The vending machine says that as long as you can pay for whatever candy bar, maybe let's say it costs a quarter, you push this button, I'll drop that candy bar, you can have that candy bar and I'll keep your money, right? So that's basically how like a baby smart contract works, right? It's a contract with a machine. Notice that there's nobody inside the vending machine. It's not like mechanical Turks back there, right? And so now you're interacting with technology. Okay, so that's basically it, right? But we have something that's really fascinating and interesting because we have this blockchain that we can interact with, right? And this is an evolution on the original Bitcoin blockchain because people wanted more functionality in it, right? And so a group of really smart people, including Charles and Vitalik and a few others, they started Ethereum. And that was a significant contribution, by the way, to add this ability to do smart contracts, right? Putting code, just code inside there. So, I think what they did was incredible and amazing. And so, but think to yourself whenever you think about smart contracts, think about the vending machine, right? I'm not going to go too far into that. I'm going to just show you, this is where I think. Yes, sir.
The smart contract thing is good. Are you going to cover like the utility token, securities?
I jumped to DeFi. So now, let me just back up a second here, all right? Coming from finance, I worked at an investment bank on Wall Street, the first part of my career. And I was thinking to myself, what the heck did I really do at that investment bank? Okay, there's these different functionalities that an investment bank does, okay? Part of it is trading. Part of it is borrowing and lending securities, right? Part of it is creating hedging strategies. We would create financial derivative instruments, sell it to customers, and we would hedge that out. Another part is making the market, right? What is market making? There's a limit order book, right? There's the ask side and the bid side, and there's the best bid ask, right? These are limit orders, and there's market orders. The point is that the functionality that investment banks traditionally have done, each one of those is starting to get attacked, okay? So automatic market making, right? Hello, Sushi Swap, Uniswap, right? Borrowing and lending, there's Compound and AVA, right? And so what's really fascinating is I was asking myself, when I went to the investment bank, I learned the job, 3 months, 6 months, 3 months, 6 months, and I kept doing the same job over and over again, right? And so, could I been coded up as a smart contract? Yeah, probably, the things that I were doing. There's a little bit more to it because you need to have some kind of relationship with a customer and client, right? Which is very important. But decentralized finance is really, really fascinating and interesting because basically it's not being very creative right now. All it's doing is finding a functionality that an investment bank does and it's attacking it. Just that. That's it, right? I think at some point, and I don't know when this is going to occur, maybe when we start understanding better how to use royalties on resale, then it'll start really disrupting the financial incumbents, right? So what I'm thinking in some of my sort of predictions here is many financial functions are just contracts between two parties. I'll give you for example, a swap, fixed versus floating, right? I'll pay you fixed interest payments, you give me floating interest payments. That is a legally binding contract. The terms of the contract is how long is it? How long are we going to do this swap? At what date are we going to make these payments? What is our reference financial instrument? Is it LIBOR, right? So all of those things are written down in a financial contract that financial contract can be codified into a smart contract. You could create a fixed versus floating swap, that's just one financial instrument deployed on the blockchain as a smart contract. Anybody who interacts with that will know the terms, right? And so, think about each one of those things. That's not very creative, by the way. It doesn't take much creativity to create that, right? Finance guys are not very creative, so, this is the best that we could do at disruption right now, okay? But I'm hoping that they'll get a little bit better at this. What about wealth management? What about robo-advising? What about asset allocation, right? What about making, investments in due diligence? That's going to be a little bit harder. What I think, okay, and this is kind of a guess, if the financial function is well specified, it's easy to understand, and there's a clean contract that determines who the counterparties are, then those things can be quickly sort of captured in a smart contract framework, and that's what we're seeing right now. What is really amazing is if before you had to call up a fixed income trading desk in order to create a swap, now you can be on the edge of the network and you'll have that swap instrument that's available to you. And that's really powerful because all those products in Wall Street that they used to just sell on Wall Street at the investment banks, now this can go to the edge of the network. And somebody in a third world country who wants, for some reason, to hedge the risk, I don't know why, they could enter into a swap contract. So that's really powerful stuff, right? What else can I tell you? What I think is really fascinating about this industry, and this is where economists and business people can really sort of chime in, is try to understand the incentives. You've got to get the incentives right for mass adoption and get people, coming into and building a community. If you don't get those incentives correct, then you're not going to have something that everybody wants to sort of do, all right? Now I'm getting kicked off.
No, you're not getting kicked out. No. You're amazing. I just want you to know that. I just want to make sure we only have about 7 minutes, and there's just a couple other learning points that I want to make sure that we get across to everybody, right? And then I want to circle back to what you're talking about right here. So if you're going to build a blockchain and you're going to put a token on it, here's a couple things that you have to know. And if I was out when you talked about this, please stop me. If you're going to put a token on, right, then there's a whole bunch of legal and regulatory considerations that may hit you. And if you're not aware of this, you could essentially end up paying big fines or go to jail and other stuff that's less than euphoric, right? So the big issue is your token a security or utility, right? Because if you put a token on your blockchain and you mischaracterize it, then the government's going to come after you, and there's a lot of information here. Yes, sir.
I've been thinking about this myself. I have a token on the Cardano blockchain, so I've been trying to figure that out myself.
All right. So let me give some basic information, then I'll come back. Yeah. So here's, and there are folks in the room. Tom Goldstein is with Cogent Law, right? He's an expert on this subject. So we only have a couple minutes. Go, the guy right behind you, go talk to him after this. But here's the main thing. If I'm going to build a token, and where's Mark, my buddy Mark? Is he in here? All right. So he's also an expert on the subject. He's not an attorney, but we've had lots of conversations about the GBA token and security versus utility. All right. If I'm going to create a token and I'm going to sell it to you, right, and make money because I'm trying to fund my project, right, now I'm dropping into the worlds of securities, right? So let me just kind of explain what we're talking about. If you think of a stock, right, the Securities and Exchange Commission is there to protect investors from Chinese thieves, right? So you're talking about a lot of the stuff that happened with the ICOs. A lot of those ICOs were total frauds. They were essentially called securities by the Securities and Exchange Commission, and rightfully so, because a lot of them just wanted to take your money and run, right? So there's something called the Howie Test, and the Howie Test basically has two main things, right? The first one is, are you selling it as an investment contract, right? So an investment contract is, I'm going to sell it to you, and you have an expectation of gain. Okay, well, so I'm telling for everybody else, right? Yeah, so if I'm going to sell it to you and you're going to buy it, and there's an expectation of gain, not based on the work that you do, but based on a network, based on something else. And this actually came out of a case, I think it was in Florida. I don't know if it was in Howie County or Howie was the name of the guy, but somebody was essentially selling plots of orange groves and giving returns to people based on the production of the orange groves. And this is kind of where the whole test came from. So if you're going to essentially sell it for an expectation of gain, and not based on the work that that person does, but based on some kind of network effect, then it's very likely a security, right? If you're going to use it in a closed community, so like poker's in a casino, right, then it's likely to be a utility, right? A utility essentially is an exchange for a usage right or, you know, or something like that. But if you're putting a token on your blockchain, you need to talk to somebody who's a lot smarter than I am, that has more time than I have right now, right?
Okay, I have a question, though.
Yeah.
Here's my million-dollar question to the Howie Test and lawyers, right? The Howie Test makes the assumption that that security cannot morph, right? What if that token can morph from being a security to raise funds to build a business, and all of a sudden turns into a utility to gas the platform? The Howie Test doesn't cover that.
Yeah, there's a lot of questions around here. And again, I wish we could spend more time to get into it, but it's, yeah, Tom.
Just briefly, I think that the SEC did contemplate that scenario when they analyzed the theory.
Yeah.
But they didn't.
That basically, I think, and again, this isn't, I have partners in my firm who are experts on this, so this is not my particular.
Yeah.
What I can say is that I believe, my recollection is they said that at the point they analyzed, they did the Howie analysis to security, it might have originally been a security, but at that point it was no longer a security because the platform was sufficiently decentralized.
Yeah. So hang on just a second, Eugene. I really wish we had more time to cover this, but Tom's out there. Eugene is an expert on the subject. You know, there's a lot in here.
You try to interpret that, but that's the challenge, I think. I think our regulations aren't taking into account those things. And even if the SEC figured it out, why don't they put down clear rules?
If you're going to talk close
I
to the
mean,
mic.
if they could figure it out, then why don't they just put down really clear rules for everybody and make it easier, right? The fact that they don't put down clear rules just makes everyone confused.
Yes.
I think one of the top SEC
And it keeps the
chairmen-
lawyers in business.
Yeah, okay, fine. It's good for the lawyers, I get that.
Who was it? Who was it? Yeah.
I just have a quick comment. To answer the question, utility versus security, one only has to answer as to how many no-action letters did SEC
Right.
sign?
Guys-
And that's
guys,
your answer.
Listen, this is a great conversation. Honestly, I need to move into one other subject, right? And we sort of, you touched on it. So when we talk about smart contracts, right, I just want to kind of give you an example of some of the applications, right? I could pay my son an allowance, and I could tell that son that your allowance is contingent on the grades that the teachers put in the grade books at school. And if the grades go above or below whatever thresholds we set, your allowance goes up or down, or you get it or you don't. I could buy a ticket for a United Airlines flight, but I could say if that flight is delayed or canceled, I get some of my money back or whatever, right? Or I can make that Social Security or Medicare payment, but you can only use it at these types of places for these types of things at these times. So the smart contract allows us to put code or intelligence into the transference of value, whether that value is money, a vote, a property record, whatever. Go to DeFi for a second. I mentioned this earlier, but I need to make this point. And gee, I wish we had just more time. The banks don't need your deposits because they can do fractional reserve lending. The exchanges do. And Mark,
I'm covering this.
oh, you are covering this in your section?
I'm going into a lot of this. This will be fun.
Okay, good. Well, then I'm going to let it be. Mark knows a lot more about it than I do, and I'm super excited. So I'm sorry to sort of jump in, but I just want to make sure that when you guys walked out of here that we covered some of those topics. Thank you, Jim.
Gerard was a guest speaker in both of my classes in DC and Baltimore, and the students love him. I think his next trip after he's done with GBA is maybe like teaching, right? Because he's such an inspirational professor type. Okay, with that, very nice to meet you. I'm looking forward to, finding more friends down in DC, and, it's been a real pleasure. So please help me get more friends in Congress. What do we need, Dante? Congress and Treasury or the SEC? Okay, thank you very much, everyone.
Thank you. All right, up next we have Mark Wasser.